Next. Assalamualaikum warahmatullahi wabarakatuh. Good morning, everyone. It's my great pleasure to welcome all of you to the International Tax Webinar 2026. The Honorable Dr. Muhammad Khairul Anwar, SAG MBI, Vice Dean for Learning, Research, Community Service, Student Affairs, and Alumni Affairs, Faculty of Economics and Business, Universitas Negeri Surabaya. The Honorable Professor Dr. Aida Hazlin Ismail, Associate Deputy Dean for Student Affairs, University Technology Mara. The Honorable Dr. Lintang Venusita SAMSC AK CA BKP ACPA, Chairperson of the Tech Center, Faculty of Economics and Business, Universitas Negeri Surabaya. The Honorable Profesor Dr. Dian Anita Nuswantara, CA BKP CIP SAS CRGP, Professor at Universitas Negeri Surabaya. The Honorable Dr. Ida Surya Ismail, CA CPA, Senior Lecturer at the Faculty of Accountancy, University Technology Mara. The Honorable Alan Firmansyah, Chairperson of the Tech Center Community 2026, Faculty of Economics and Business, Universitas Negeri Surabaya. The Honorable Zahra Pranda Putri, Chief Committee of the International Tax Webinar 2026, and distinguished participants and guests of the International Tax Webinar 2026, whom we are delighted to welcome today. First and foremost, let us express our gratitude to Almighty God for His blessings and grace, which allow us to gather today at the International Tax Webinar 2026 with the theme, Navigating Carbon Tax Policy to Achieve Climate Goals Through Global Turbulence. First of all, allow me to introduce myself. My name is Khanita Rahmania, and I will serve as the Master of Ceremony for today's event. Before we begin, allow me to present the agenda for today's International Tax Webinar 2026. Starting with opening, then listening the national anthem of Indonesia and Malaysia, then opening remarks, then documentation session, then screening of the Tax Center Community Universitas Negeri Surabaya profile video, then screening of the SMF Perakaunan University Technology Mara profile video, then introduction of the moderator, then first speaker presentation followed by a Q&A session, then second speaker presentation followed by a Q&A session, then presentation of certificates to the speakers, then material summary and conclusion by the moderator, then quiz time, then rewarding session, and then closing. Distinguished guests, ladies and gentlemen, before we proceed with today's program, let us take a moment to offer a prayer according to our respective religions and beliefs. Prayer begin. Thank you. The prayer has been concluded. May today's event proceed smoothly and successfully. Before we proceed to the next agenda, we would like to announce that the initial attendance form is now open for the next 30 minutes. The committee has shared the Google Form link in both the Zoom chat box and the YouTube live chat. Please make sure to complete the form to ensure that your attendance is properly recorded. We also encourage all participants to stay attentive throughout the webinar and carefully follow the information delivered during the event, so that you do not miss any important announcement and updates. We shall now proceed with the singing of national anthems. We invite all participants, wherever you may be, to respectfully sing the national anthem of Indonesia Raya, followed by the national anthem of Malaysia, Negaraku.
bukan first time aku jadi. Lain.
Thank you for your participation. Next, we will hear the greetings from the Chief Committee of the International Tax Webinar 2026, Ms. Zahra Prandaputri. We warmly invite her to deliver her greetings.
Thank you so much, MC, for the opportunity. Assalamualaikum warahmatullahi wabarakatuh. A very good morning to everyone. The Honorable Dr. Haji Muhammad Khairul Anwar SAG MEI, Vice Dean for Academic Affairs, Research, Community Service, Student Affairs, and Alumni Relations, Faculty of Economic and Businesses, Universitas Negeri Surabaya. The Honorable Prof. Dr. Aida Haslin Ismail, Associate Deputy Dean for Student Affairs, University Teknologi Mara. The Honorable Dr. Lintang Felicita, SAMSI AKCA BKP ACPA, Chairperson of the Tech Center, Faculty of Economics and Business, Universitas Negeri Surabaya. The Honorable Prof. Dr. Dian Anita Nuswantara, CABKP CIPSES CRGP, Professor at Universitas Negeri Surabaya. The Honorable Dr. Ida Surya Ismail, CACPA, Senior Lecturer at the Faculty of Accountancy, Universitas Teknologi Mara. Distinguished guests and participants of the International Tax Webinar 2026. First and foremost, let us express our gratitude to Almighty God for His blessing and grace, which allow us to gather today and participate in the International Tax Webinar organized by the Tax Center community of the Faculty of Economics and Business, Universitas Negeri Surabaya, in collaboration with SMF Perakaunan, University Teknologi Mara. On behalf of the organizing committee, I would like to extend a warm welcome and my sincere appreciation to all participants for taking the time to join us in this webinar entitled Navigating Carbon Tax Policy to Achieve Climate Goals Through Global Turbulence. Ladies and gentlemen, as climate change continues to pose increasingly complex challenges across the globe, it has become our shared responsibility to support efforts that promote sustainable development. Amid global economic uncertainty, geopolitical tensions, inflationary pressures, and ongoing recovery challenge, understanding the role of carbon taxation has become more important than ever. At the same time, the implementation of carbon tax policies presents various challenges that require careful consideration. Therefore, through this webinar, we hope to provide a platform for meaningful discussion and knowledge sharing on the challenges and strategies surrounding carbon tax implementation, enabling participants to gain a broader understanding of how green fiscal policies can contribute to climate goals while maintaining economic stability in an increasingly dynamic global environment. We are truly honored to welcome our distinguished speakers from Indonesia and Malaysia, who will share their expertise and perspective on carbon tax policies across different countries. We would also like to express our sincere appreciation to SMF Perakaunan and University Technology Mara for their trust, support, and valuable partnership in making this event possible. This collaboration reflects the importance of international academic cooperation in strengthening knowledge exchange and fostering broader perspective on global challenges, particularly in the areas of taxation and sustainability. I would also like to extend my sincere gratitude to the media partners and all committee members for their dedication, hard work, and commitment throughout the preparation and implementation of this event. Finally, I hope that this webinar will provide valuable insights, broaden our perspective, and serve as a meaningful platform for constructive dialogue as we work together toward a more sustainable future. That concludes my remarks. Should there be any shortcoming during the event, we sincerely apologize and appreciate your understanding. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you, Ms. Zahra Prandaputri, for the warm and inspiring opening greetings. We will now proceed to the remarks from the Vice Chairperson of the Tax Center Community, Ms. Aurelia Husnul Nur Aziza. We warmly invite her to deliver her remarks. The time is yours.
All right, thank you so much, MC, for giving me the floor. So, Assalamualaikum warahmatullahi wabarakatuh. Good morning, everyone. Firstly, please allow me to extend our highest respect and warmest welcome to our honorable guests, speakers, and colleagues. The Honorable Dr. Muhammad Khairul Anwar, SAG MEI, the Vice Deans for Academic Affairs, Research, Community Service, Student Affairs, and Alumni Relations, Faculty of Economics and Business, Universitas Negeri Surabaya. The Honorable Professor Dr. Aida Hajlin Ismail, Associate Deputy Dean for Student Affairs, University Technology Mara. The Honorable Dr. Lintang Fenisita, SA, MSc, AKCE, BKP, ACPA, the Chairperson of the Tax Center, Faculty of Economics and Business, Universitas Negeri Surabaya. The Honorable Professor Dr. Dian Anita Nusantara, CA, BKP, CIBSAS, CRGP, Professor at Universitas Negeri Surabaya. The Honorable Dr. Ida Surya Ismail, CA, CPA, Senior Lecturer at the Faculty of Accountancy, University Technology Mara. The Honorable Alan Firmansyah, Chairperson of the Tax Center Community, Faculty of Economics and Business, Universitas Negeri Surabaya. The Honorable Zahra Prandaputri as a Chair Committee of the International Tax Webinar 2026. And last but not least, all of our distinguished participants and guests who joining us from various places today. So as you may notice, I am speaking right now delivering the greetings on behalf of our Chairperson, Alan Firmansyah. He deeply regrets that he cannot be with us at this moment due to an unavoidable engagement, and he sends his warmest regards to everyone here today. So therefore, as the Vice Chairperson, it is an absolute honor for me to step in and welcome you all. So on behalf of the Tax Center community, I would like to express our sincerest gratitude and appreciation to SMF Perakaunan, University Technology Mara. Thank you so much for your incredible willingness to collaborate with us once again. This partnership actually holds a very special meaning for us. Like 2 years ago, we had the privilege of hosting a single international tax webinar with UiTM as our partner. And looking back at the success, we are deeply grateful that we can reunite today to create another impactful forum. So this partnership actually, this year, our collaboration brings forward a highly critical theme that is navigating carbon tax policy to achieve climate goals through a global turbulence. So as we face rapid climate change alongside economics and geopolitical uncertainties worldwide, the implementation of carbon tax policies becomes a vital instrument, and it is no longer just a fiscal strategy, but a fundamental pillar in steering our nation towards sustainable green economies and achieving global climate goals. So I believe that through this insight of our wonderful speakers and cross-border discussion we will have today, we can get so much deeper understanding of how to face these challenges together. So to conclude my greeting, I want to say huge thank you to organizing committees, our friends at UITM, and everyone who worked behind the scenes to make this webinar a reality. I hope today's session not only provide deeply meaning insight, but also inspire meaningful action for our future. So thank you so much. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you, Ms. Aurelia Husnul Azizah, for the valuable remarks. Now, we are honored to hear remarks from our distinguished Vice Dean for Learning, Research, Community Service, Student Affairs, and Alumni Relations, Faculty of Economics and Business, Universitas Negeri Surabaya, Dr. Haji Muhammad Khairul Anwar. But because several constraints, he can join with us today. Therefore, there are Mr. Angga Marta Mahendra, MPD, as the representative. We warmly invite him to deliver his remarks.
Okay, thank you. Assalamualaikum. Good morning, distinguished guests, respected speaker, lecturer, student, and participant. This is my great pleasure on behalf of the Student Organization Official to warmly welcome you all to this International Tax Webinar. I would like to express our sincere appreciation to our distinguished speaker and honorable guests from Universitas Negeri Surabaya and University Teknologi Mara for joining us today and sharing the valuable knowledge and expertise. Your presences thoroughly emphasize this international academic collaboration. I also extend my appreciation to the organization committee and everyone who has contributed to making this event possible. I hope today's webinar will run smoothly, inspire meaningful discussion, strengthen international partnership, and provide valuable insight for all participants. Thank you for your attention. Wassalamualaikum warahmatullahi wabarakatuh. Thank you.
Thank you, Mr. Angga Marta Mahendra, MPD, for the valuable remarks. To conclude the speeches session, we are now privileged to hear from ASOC Professor Dr. Intan Wahidah binti Othman, Head of AIS Audit and Tax of Faculty of Accountancy, University Teknologi Mara. We respectfully invite Professor Dr. Intan Wahidah binti Othman to deliver her remarks.
Yang berusaha Dr. Muhammad Khairul Anwar, our Vice Dean 1, Faculty of Economics and Business, Universitas Negeri Surabaya. Yang berusaha Prof. Dr. Dian Anita Nuswantara, Professor Faculty of Economics and Business, Universitas Negeri Surabaya. Yang berusaha Dr. Ida Surya binti Ismail, Senior Lecturer of the Faculty of Accountancy, University Teknologi Mara, UiTM. Yang berbahagia Lintang Venusita, Chairperson Tax Center. Yang berbahagia Alan Firmansyah, the head of Tax Center. And yang berbahagia Zahra Pranda Putri, the Chief Committee. So, respected lecturers, student leaders, the organizing committees of the International Tax Webinar 2026, all of our beloved students and participants, Alhamdulillah, let us all be grateful to Allah subhanahu wa ta'ala for the blessings, health, and well-being bestowed upon us, allowing us to gather virtually for this International Tax Webinar 2026, entitled Navigating Carbon Tax Policy to Achieve Climate Goals Through Global Turbulence. On behalf of the Faculty of Accountancy, UiTM, I would like to extend a warm welcome to our distinguished speakers, representatives from Universitas Negeri Surabaya, lecturers and students who are joining us today. I am truly delighted to see such encouraging participation in this collaborative program. Lecturers and students, the topic of carbon taxation is becoming increasingly important as countries seek to achieve climate goals while maintaining economic stability. As future professionals and leaders, we need to stay informed about global developments and policies that shape sustainable economic growth. I believe this webinar will provide valuable insights into current challenges and encourage a deeper understanding of the relationship between economic development and environmental sustainability. I am also proud to see this collaboration between UiTM and UNESA, which reflects our shared commitment to academic excellence and international engagement. This webinar provides a valuable opportunity for participants to learn from experts and gain new insights into important contemporary issues. I hope that all participants will benefit from the discussions throughout the session, build meaningful connections, and be inspired to continue learning beyond this webinar. Finally, I would like to congratulate as well as thank the organizing committee from Tax Center Community, Secretariat Mahasiswa Fakulty, SMF, Perakaunan, and all collaborating parties for their dedication and efforts in making this webinar possible. So I think that's all from me. Thank you. Wabillahi taufiq wal hidayah. Assalamualaikum warahmatullahi wabarakatuh.
Thank you very much, Professor Dr. Intan Wahidah binti Othman, for the wonderful remarks. We will now proceed to the group photo session. We kindly invite all honorable speakers, distinguished guests, and participants to prepare for the group photo session. For participants joining by Zoom, we kindly ask that you turn on your cameras for the photo session. Please look at the camera and give us your best smile. All right, if everyone is ready, we'll start with a formal group photo. I'll do a countdown in 3, 2, 1. Next slide. 3, 2, 1. Next, we'd like to take a photo using the Tax Center Community Signature Pose. Kindly raise 2 fingers in the Tax Center Community Salute. All right, ready everyone? I'll do a countdown in 3, 2, 1. Next slide. 3, 2, 1. All right, thank you. The group photo session has concluded. We shall now proceed to the next agenda. Next, We invite all participants to watch the Tech Center Community Universitas Negeri Surabaya profile video. Through this video, we hope you will gain a better understanding of who we are and the activities we carry out. Please direct your attention to the screen.
Pajak bersifat sangat vital bagi masyarakat, negara, maupun bisnis.
Demi membangun generasi yang sadar akan peran strategisnya di bidang perpajakan, Tech Center Community UNESA hadir untuk kalian, calon pemimpin pajak Indonesia. Di sini, kalian tidak hanya akan belajar secara teori, namun kalian akan berperan dan berinteraksi dengan kasus-kasus perpajakan, dan bersama kami, kalian akan mengembangkan soft skill kalian.
Tech Center Community adalah unit kegiatan mahasiswa di bawah Direktorat Jenderal Pajak yang bertugas melibatkan instruksi pajak dan membentuk profesional di bidang perpajakan.
Saya, Muhammad Ridwan Mamuka sebagai Ketua Tech Center Community.
Dan saya, Aisyah Zulfindari sebagai Wakil Ketua Tech Center Community. Selamat datang di Tech Center Community. Kontribusi pada negara, mengembangkan pengetahuan dan menjadi ruang pengabdian melalui literasi perpajakan.
Mari bergabung bersama kami, bersama Tech Center Community, berpajak cerdas, berdampak luas.
That concludes the profile video of Tech Center Community Universitas Negeri Surabaya. Thank you for your attention. Next, let us take a moment to learn more about our international partner, SMF Parakaunan University Technology Nara, through their profile video. Please direct your attention to the screen. Thank you. That was insightful introduction to our esteemed partner, the University Technology Mara. We will now proceed to the main session of today's event, featuring the presentations from our distinguished speakers. Each presentation will be followed by a Q&A session and will conclude with a summary delivered by our moderator. This entire segment will be guided by our wonderful moderator, Mrs. Intan Kurnia Permatasari, SAAKMA-CACFP. First of all, allow me to introduce our amazing moderator, Mrs. Intan Kurnia Permatasari, SAAKMA-CACFP. She completed her bachelor's degree in accounting, accountant professional education, and master's degree in tax accounting, all at Universitas Airlangga. She brings wealth of expertise from both the professional and corporate world, having worked as a supervisor auditor and tax consultant at KAP Paul Hadiwinata, a member of PKF International. Currently, she is a dedicated lecturer at the Universitas Negeri Surabaya. On top of her academic roles, she is an active member of the Institute of Indonesia Chartered Accountants, or IAI, a certified competency assessor for the Indonesian Taxation Professional Certification, and has expanded her global impact as a visiting lecturer at Srina Hadinwirat University in Bangkok back in 2025. Without further ado, I would like to greet our wonderful moderator. Everyone, please welcome Mrs. Intan Kurnia Permatasari. Good morning, Ms. Intan. Thank you for joining us today. How are you doing this morning?
Hey, good morning. I'm fine, thank you.
That's great to hear, Ms. Intan. We are truly delighted to have you with us today. Looking at the exciting topic and our distinguished speaker, I believe today's discussion will be very insightful, isn't it? Before we start, are you ready to lead today's session, Miss?
Okay, yes, I'm ready.
That's great to hear, Ms. Intan. Without further ado, I would like to hand over the session to you. The time is yours.
Okay, thank you to Master Ceremony. Thank you very much. Good morning, ladies and gentlemen. Welcome to International Tax Webinar and held by Tax Center Community, Faculty of Economics and Business, Universitas Negeri Surabaya. My name is Intan Kurnia Permatasari, and I'll be serving as the moderator and will guide today's session. Okay, as you know that climate change has become one of the most pressing global challenges of our time. As countries strive to meet their emission reduction targets and advance toward net zero commitment, policymakers around the world are increasingly exploring effective instruments to accelerate the transition to a low carbon economy. Among these instruments, carbon taxation has emerged as a key policy tool, serving not only as a mechanism to reduce greenhouse gas emission, but also as an integral component of green fiscal policy that support sustainability developments. Nevertheless, the implementation of carbon tax policy is accompanied by significant challenge, difference in economic development, variation in carbon pricing across jurisdiction, and involving international trade dynamics and emerging measures such as carbon border adjustment in mechanism require policymakers and stakeholders to carefully balance environmental objectives with economic competitiveness. Through this webinar entitled Navigating Carbon Tax Policy to Achieve Climate Goals Through Global Turbulence, we will gain valuable insight from distinguished experts who will share both global perspective and practical strategies regarding the implementation of carbon tax policies. Today's discussion is expected to deepen our understanding of the challenge opportunities, and strategic approach that government, industries, and other stakeholders can adopt to ensure that carbon taxation contributes effectively to climate goals while sustaining economic growth and international competitiveness. So, without further ado, let us begin our session by welcoming our distinguished speaker who will guide us through this important and timely discussion. Today, we have an interesting topic that will be presented by our keynote speaker. We have Professor Dr. Dian Anita Nuswantara, CA BKP, CIPCS CRGP from Universitas Negeri Surabaya, Indonesia, and Dr. Ida Surya Ismail, CAM CPA Australia from University Technology Mara, Malaysia. It's a great honor for me to introduce the first speaker for today, and I'd like to greet Professor Dr. Dian Anita Nuswantara. Okay, hello, Dr. Dian, Professor Dian.
Do you hear me clearly? Can you hear me clearly, Dr. Intan?
Okay. Okay, hello, Prof. Dian. Even
Hello.
though we are in the same city and attend the same university because of our busy work schedule, we rarely get to meet in person. Often we only interact through the WhatsApp group chat, responding the message with sticker or thumbs up like this, or only heart. So, how are you today, Professor Dian?
Well, great. As you.
Okay, okay. Let me introduce the first speaker for today. To operator, would you please to share the profile? Thank you. Yeah. Okay, Professor Dr. Dian Anita Nuswantara, CABKP, CIPSAS, CRGP, is a professor in the Faculty of Economics and Business at Universitas Negeri Surabaya. She earned her bachelor's and doctoral degrees from Erlangga University and her master's degree from Gadjah Mada University, all in the field of accounting. She is an active academic and researcher, teaching courses in public sector accounting, management accounting, strategic management, and organizational behavior. Her research focus on governance, risk management, sustainability reporting, and public sector accounting. She has also published numerous scholarly articles in reputable national and international journals. In addition to her academic work, Professor Dian is also involved in various professional activities. She currently serves on the audit committee of PTCR as chair of APSAI and as reviewer for various national and international academic journals in the field of accounting, finance, and governance. So, today we have an interesting topic that will be presented by the speaker. And to Prof. Dian, the presentation will be 45 minutes, and I will give you a sign when there is 5 minutes left, and we have 15 minutes for discussion. And for the audience, please do not turn on the microphone during the presentation. If you have any question, please raise your hand in Q&A session or put the comment in the chat box, then I read them later. Please state your name and affiliation before asking your question. Okay, without any further ado, we invite the first speaker, Professor Dr. Dian Anita Nuswantara. Please do the honor to start the presentation.
Okay, thank you, Dr. Intan. Hopefully everyone can hear me clearly because I'm on the way to my hometown. Good morning and Assalamualaikum warahmatullahi wabarakatuh, and may God bless us all. The distinguished
Waalaikumsalam.
guest, distinguished guests, fellow tax academicians, international practitioners attending this international tax webinar. Today, I am very happy to meet you in this webinar.
Setelah 300 meter, belok kanan.
Presenting from Tax Center UNESA in collaboration with UITM is a very collaboration. I think this is the second time I attending this collaboration. So thank you, UITM, all faculties, all management committee that keep this collaboration fruitful and meaningful. Today, we have a webinar under title Navigating Carbon Tax Policy to Achieve Climate Goals Through Global Turbulence. First, we will emphasize, for continuing this presentation, the global turbulence terms. This term means that the reality on the world stage today, carbon taxation is no longer only a domestic or local environmental instrument to lower emission at the grassroots levels. Instead, it has moved toward a potent weapon of fiscal geopolitics. Dr. Intan already mentioned and emphasized this. The fiscal geopolitics is a border protection parameter testing economic sovereignty in developed nations, the global north, and developing nations like us in Southeast Asia. Both Indonesia and Malaysia now currently in active phase of exploring and assessing the feasibility of these tax instruments for the upcoming national economic framework. For Indonesia, today, we already taken step by establishing. Oh, sorry. Can you help to provide the slide, operator? We start from the slide, first slide. Thank you very much. Sorry for not informing you. We go to the first slide. Okay. This is our agenda today. We have 5 agenda, and now I'm in the first agenda. So can continue to the first slide. Sorry, third slide. Thank you. Both Indonesia and Malaysia now already in their progress. For Indonesia, we are now in a step by establishing an explicit formal legal foundation within our national tax legislation. Unfortunately, the operational challenges faced across the Asian region are strikingly similar. It is precisely in this vortex of multilateral trade frictions, supply chain disruption, and asymmetric environmental standards that we are compelled to navigate tactfully, safeguarding our fiscal sovereignty without compromising our moral commitment to the future of our planet. This is our first agenda, the theoretical foundation and global policy landscape. In this session, we will deconstruct the scientific basis of environmental taxation and map out global carbon pricing regulatory landscape. Ladies and gentlemen, from the screen, we can see that we have three sessions in theory. First, market inefficiency. As we know that in all work, in every countries, the industry create product, create what you need, but they sometimes forget its externalities. This is the greatest market failure we face nowadays. We have a greenhouse. We accept, we normalize, we accept greenhouse gas emissions. We think this is natural. We think this is normal. For over 2 centuries since the Industrial Revolution, the global corporation burned out fossil fuels for free, pocketing massive private financial margins, while the long-term environmental damage ranging from extreme climate crisis, global crop failures, to natural disasters. These externalities is a cost borne entirely by the public. This happened around the world. The extreme case of negative externality where social costs are never internalized, never captured in market price. From the second theory, second perspective, we talk about Pigovian tax. Grounded in the universal principle of international environmental law, the Pigovian tax perspective says the polluter pays principle. It dictates that whoever pollutes must bear the financial cost of remediation. A carbon tax internalizes this external cost. This is from the Pigovian tax perspective. In microeconomic terms, imposing this tax forces the private supply curve upward to align with the true social cost curve. The direct effect is the elimination of allocative market inefficiency, known as dead weight loss, DWL, thereby establishing a new equilibrium that is socially and economically equitable. This is how Pigovian tax works. Someday, one day, we don't know when, we will find the new market price, the equilibrium price, where the social and economic aspect meets. This price-based approach through taxation proves to be far more superior and efficient in practice compared to rigid, conventional command and control regulation. We know that every government, the people try to control, try to monitor the manufacturer process in their countries. But now we can see it doesn't work well. Taxation offers a flexibility to market mechanism. Efficient and innovative industries are economically incentivized to pioneer green technologies to avoid tax liabilities, while inefficient, stagnant industry will naturally be phased out. They will be phased out by the heavy burden of environmental taxes. This is why how Ecovian tax works again. That is the third perspective of our theory today. We can see from the infographic in the right side, how market failure impose Pigovian tax, and the Pigovian tax will place the price in the equilibrium point. The next slide, we go to global carbon pricing policy landscape. We see from the map an interactive word map that distinguishing regions utilize pure carbon tax same from those using ETS, emission trading system. And we can see the result. Only 23% global emissions. We can see 23 in circle. What does it mean? Back to Pigovian taxation. When the theory, the Pigovian taxation interest translated into governance practices worldwide, there are two primary policy pathways emerged for establishing a price on carbon. The first pathway is pure carbon tax. It is a direct levy per metric ton of carbon dioxide equivalent emitted. Its defining the characteristic of this system is that it provides a high degree of price certainty for businesses with a fixed and predictable tax rate. Corporate management can precisely calculate long-term compliance costs within their financial planning. However, the inherent weakness is the government lacks an absolute quantitative guarantee regarding the exact volume of emission that will actually be reduced. Move to the second pathway, the EMS, emission trading system, commonly referred to cap and trade market. In stark contrast to a pure tax, ETS locks in the absolute quantity of emission by establishing a strict annual cap or quota. Companies whose actual emission exceed their allocated quota are legally required to purchase excess carbon credits from other entities that have successfully achieved green surpluses. Means the green will incentivize, the dark, the black, or the green other than green will be punished by paying more. While an ETS ensures absolute quantitative emission reductions for a nation's ecological commitments, it also have severe financial unpredictability for industries, as carbon credit prices fluctuate highly based on market supply and demand. According to comprehensive global study published in 2024, PAN found that there are over 70 jurisdictions that have implemented either one or a hybrid combination of those two systems. Unfortunately, a striking and concerning statistical fact is the total coverage of all carbon pricing instruments globally today only account for approximately 23% of global greenhouse gas emissions. This what the visual, the map says, that only 23% of global greenhouse gas emissions is captured, can accommodate with the two or the hybrid systems. Why? The number of very small. Due to the sensitive domestic political consideration, most countries intentionally exempt critical sectors. For Indonesia, for example, agriculture, domestic transport, food industry is still excluded from carbon pricing to prevent inflationary shocks on basic consumer goods. This is the very difficult decision for the government of Indonesia. Which must be our priority. And we also believe that this will also happen in other countries. When we see the carbon tax, this is a direct system. When we see EDS, this is indirect systems. Both are important. Both have a high contribution. But as we know, both also have its challenge. Next slide. Next slide is talk about carbon border adjustment mechanism. This is the reason why Indonesia and other countries start to consider either carbon tax or EDS. Since we already know that 23% only the emission of greenhouse gas captured by the system now, the CBM, the Carbon Border Adjustment Mechanism, that first born from European Union. CBM actually is a border carbon adjustment levied as a custom tariff at the EU border on imported goods originating from non-EU countries. In its current initial implementation phase, the EU has strictly targeted 6 highly strategic carbon-intensive commodity sectors in a global trade. That is cement, chemical fertilizers, iron and steel products, aluminium, electricity production, and hydrogen gas. Why CBAM? Shortly, I called CBAM so urgent and critical for us today. In Indonesia, for example, in Indonesian case, start from January 2026, the critical deadline where the full financial compliance phase officially takes effect across all European borders. It means the EU, the European Union, start the CBAM for. While during this transitional phase between 2023 and 2025, exporters outside Europe only required to submit administrative reports regarding the product's carbon footprints without financial penalties. But effective from January 2026, every imported cargo must pay the carbon price differential in cash. The technical process works as follows. Let's see, the steel produced in manufacturing plant outside Europe arrive at Europe custom port. Local authority verify the carbon accounting documentation of the product. It means now accounting subject move to not only count financial numbers, how your business goes on, but how many carbons you left out. If the country of origin does not levy a carbon tax, or if its domestic tariff is excessively cheap compared to the EU ETS market price, then that is the object of the tax imposed for the import goods when enters Europe. It means the price goes up. The question is, how high it goes up? This represents a clear unilateral externalization of internal European policy onto a global trade. Not only Asia, all countries will impose the same scheme like Europe. Let's see the case one in the next slide. We will talk about CBAM. Is it a green protectionism or a climate justice? Ladies and gentlemen, this is where our role as tax academicians to be critical and analytical in deconstructing the underlying motives of international policies. In its official global politics rhetoric, the EU consistently invokes the moral narrative of preventing carbon leakage legitimize CBAM. They argue, without this border tax, European domestic industry, which are heavily burdened by strict and expensive internal environmental regulation, would simply relocate their production facilities to developing nations with lower emission tax, tax emission law. For Europeans, CBAM ensures that pollution does not merely shift geographic location on our shared planet. However, let's see the other side. The empirical reality behind this ecological facade through the lens of international climate justice. A rigorous empirical study in 2024, Zhang and Pei, they published their prestigious article. They utilize general equilibrium modeling to prove mathematically that CBAM is fundamentally an act of disguised green protectionism. This unilateral instrument is deliberately structured to neutralize the comparative trade advantage held by developing nations. Due to these border tariffs, the export costs of manufacturing commodities from developing nations like Indonesia to European markets are projected to surge by double digits, instantly displacing our product from global supply chains to shield European domestic industries from free market competition. From historical perspective, this represents profoundly unjust moral dilemma. Wealthy Western nations have exploited and burned coal, fossil fuel for free for over 250 years. Please listen. Free for over 250 years. Since the Industrial Revolution, since they modernized the manufacturing, they burn coal freely. Today, as developing nations in Asia and Africa strive to utilize the exact same way to industrialization to elevate their economic status and lead millions of citizens out of poverty, developed nations erecting tax blockades, tariff walls under the guise of environmental salvation. This is a clear manifestation of structural injustice. Let's highlight. This is a clear manifestation of structural injustice. Go to the next slide. Extreme global carbon price disparity. We can see here. This chart demonstrating international carbon price disparities by country based on official OECD data in 2025. The data show that Sweden and Switzerland is the highest, above USD 130, contrasting to Singapore and Indonesia at the lowest, at the bottom. I just outline is deeply rooted in the raw data presented from the OECD. This official data documenting just how fragmented, unequal, and deeply divided the real-world carbon pricing landscape is across different jurisdictions today. Let us look closely at the sharp contrast between two opposing ends of the spectrum. On the far left, we see wealthy nations with very high per capita income, such as Sweden, Switzerland, capable of setting astonishing carbon tax rates, exceed $130 per metric ton of carbon dioxide emission. They possess the fiscal luxury to enforce such high rates because their socio-economic structures, public awareness, and green technology investment have matured consistently since the early 90s. However, let us direct our attention to the bottom of the chart. The reality of developing nations is precise. Within our regional neighborhood in Southeast Asia, Singapore, defying a rate around $4. In Indonesia, the bottom one is USD $2 per metric ton. This massive carbon price disparity is the primary trigger for international trade conflicts today, forcing a homogeneous global carbon price standard or demanding that developing nations immediately align their environmental tariff with developed world benchmark without factoring in national fiscal capacity, poverty rates, and a deep reliance on cheap fossil energy is an economic policy that is blind, unrealistic, ignorant of the secular work asymmetric between nations. Let's see slide, the next slide, the case study of IMF ICBR proposal. It's structural injustice again. In response to the extreme carbon price gap, multilateral financial institutions like the IMF have stepped forward with an alternative global solution. They propose international carbon price floor, ICPR, a framework that designed to establish global carbon price floors stratified into 3 tiers based on a country's economic income classification. The IMF proposed 3 price floors. First, USD 75 per ton for advanced economies. USD $50 for China and India, and $25 for low-income economies. At first glance, if you read this proposal, this stratified model appears equitable, empathetic to the economic constraints of developing nations. However, let us critically deconstruct the deep simulation analysis done by E. Tsai in 2024. This is, once again, I use literature research conducted in 2020. You can see this in Journal of Global Policy. They mention that through precise macroeconomic modeling, the research proves that the IMF proposal is heavily biased toward Western interests and structurally asymmetric. Why? Because for developed nations like EU and US, the IMF said USD 75 is such like a paper tiger that imposed no binding economic adjustment. Internally, to meet their long-term NDC emission reduction targets, the actual internal shadow price of carbon in these wealthy nations has long been far above EQ, floating between USD 2,244, USD 418 per ton. Thus, for wealthy nations, the IMF rule demands absolutely no change in economic behavior. Conversely, there is examine destructive impact on developing nations. If China and India forced to rapidly jump to meet the IMF floor, that is $50 or $25. It means forcing them to increase their real domestic tariff by 2 to 6 times their current rates in a very short time frame. Such a sudden and massive production cost shock, and it's guaranteed to cripple the competitive advantage of developing manufacturing, triggers severe energy price inflation that punish the poorest citizens at the grassroots level, and risk dragging national economies into premature deindustrialization. This is authentic empirical evidence of how a global proposal can be structured to minimize the burden on rich countries while transmitting economically paralyzing shocks to developing ones. We go to the next slide about geopolitical turbulence of green taxation. This visual illustrating trade diplomacy friction, a fractured handshake between G77 China coalition of developing nations and G7 developed nations. Ladies and gentlemen, the structural asymmetries of unilateral policies like AU-CPAM and the institutional biases embedded in the IMF proposal are the exact pillars driving the geopolitical turbulence surrounding green taxation on the international stage today. The impact is no longer confined to academic journal pages. It has spilled over into intense diplomatic standoff at international negotiating tables. The coalition of developing nations under G77 plus China bloc, alongside emerging economic giants like India and Brazil, have officially, vocally lodged strong protests, accusing Western nations of executing neo-green imperialism agenda. This agenda deliberately violates international trade law under the WTO Trade Organization, WTO. From a legal standpoint within the WTO framework, imposing unilateral border carbon adjustment is highly vulnerable to violating two foundational legal pillars that maintain global trade peace for decades. Most favored nation principle under Article 1 and the national treatment principle under Article 2. Universal WTO will strictly prohibit member states from levying, differentiating custom tariff, or applying discriminatory treatment against identical imported commodities based on differences in their environmental. We call, if this legal dispute continues to hit a wall and the European nation remain obstinate in enforcing its border tariff, we are effectively opening the floodgates to a dark new area of global trade, a full-scale green trade war. Developing nations will certainly not stand by passively and accept this discrimination. They hold the legitimate economic justification to execute fiscal retaliation by slapping high retaliatory custom duties on advanced technologies, automotive imports, and digital service assets exported by developed economies. As a consequence of this tariff versus tariff class, the stability of global supply chains as a whole now faces a very real threat of collapse. Next slide, we talk about institutional challenges, the MRV system infrastructure, monitoring, reporting, and verification. This is the ecosystem. Distinguished college and international students having dissected the macro dynamics of taxation and trade tensions globally. Now, we refocus our attention on a dimension close to our professional expertise. The accounting, administrative, and domestic institutional aspect. We must be honest and realistic as accountants. The carbon tax law, no matter how sophisticated or beautifully written its legal clauses are, will turn into a dead and sterile piece of paper if the nation lacks a credible MRV, monitoring, reporting, verification infrastructure on the ground. The MRV is the heartbeat and operational backbone of a carbon emission accounting. As detailed in our technical breakdown in the first slide, actual emission loads cannot be measured randomly. They require continuous activity data tracking, standardized reporting to national registries, and independent verification processes before nominal tax liabilities can be collected by tax authorities. This is precisely where developing nations face severe institutional hurdles in enforcing an MRV ecosystem, which fundamentally boil down and two critical stumbling blocks. The first hurdle is prohibitively expensive compliance costs. Please note, prohibitively expensive compliance costs to comply with a carbon tax law. Corporations do not merely pay the tax tariff itself. They are forced to invest heavily in advanced emission sensor technologies, intensive human resource training, and premium service fees for international third-party carbon auditors, whose rates are exceptionally high. For accounting study program, this is very hot issue. This administrative cost burden threatens to drain the financial liquidity of industries, particularly mid-sized enterprises. The second alarming hurdle is the risk of corporate greenwashing and data manipulation. When a government regulatory oversight capacity and domestic pool of qualified emission auditors are severely limited, massive moral hazard loopholes emerge. Unscrupulous corporations can easily manipulate the coefficient within their emission. Accounting audit reports on paper to appear compliant solely to evade nominal tax payment to the state, while in reality, their factories' smokestacks continue to pump millions of tons of toxic pollution into our atmosphere. Without an ironclad MRV system, a carbon tax risks degrading into a fertile fertile ground for corruption and data falsification. This is a very hot issue. Next slide, we talk about Indonesia carbon policy blueprint. Let's see in the visual, in the screen, in the midst of the global storm of regulatory friction and heavy institutional barriers, where does Indonesia stand? This time I want to make an optimistic yet objective assertion before this international forum. Indonesia holds a highly progressive and courageous climate regulatory leadership in Southeast Asia. We must appreciate our minister, our government related to the fiscal policymakers. They are already produced a legal masterpiece in the form of Law Number 7, 2021, the harmonization of tax regulation in Indonesia. It's known as UU-HPP. Through the enactment of this legislation, Indonesia made international history as one of the very first developing nations in the world to successfully codify formal carbon tax rules directly into the statutory structures of its national tax code, detailed truly within Chapter 6 of the Harmonization of Tax Regulation. This robust legislative foundation was further reinforced at the executive and operational level through the issuance of Presidential Regulation number 98 in 2021 concerning the implementation of the economic value of carbon. Let us analyze this blueprint architecture. Through the integration of this regulation, the Presidential Regulation, the carbon pricing governance in Indonesia designed so that the tax instrument does not stand alone as a rigid, punitive. Instead, our carbon tax is deliberately engineered to integrate fully and act as a supporting mechanism for the domestic carbon trade market ecosystem. It's facilitated through our national carbon exchange, the IDX Carbon. This comprehensive legislative is authentic proof to the world that we are not merely make promises in international forums, but we also execute real actions to fulfill the global emission reduction target set forth in our nationally determined contribution. In the next slide, we will discuss, we can see the infographic of the hybrid cap and tax mechanism applied to the coal-fired power plant sector. Even though our legislative umbrella is highly advanced, when it comes to real execution on the ground, the government chosen to adopt a pragmatic philosophy, learning to walk before we leap approach. This path was taken based on a very high consideration on macroeconomic prudence and social stability. Our initial carbon tax operational policy is strictly targeted and focused on the coal-fired power plant. From a tax administration lens, this is an exceptionally clever strategy. Why? Because This sector is low-hanging fruit, a sector with a limited number of actors, but contributing the largest chunk of national emissions with highly concentrated, easily auditably activity data. This shortens the learning curve for our fiscal administration, minimizes the risk of regulatory oversight failure. This economic prudence is also clearly reflected in the baseline rate of our carbon tax. This is intentionally set at a highly prudent, investment-friendly level of 30 per kilogram of carbon dioxide emission, equivalent to roughly $2.8 metric ton of emissions. This initial single-digit tariff is intentionally designed to sit far below developed world benchmark to mitigate the risk of transmitting direct shocks into the domestic inflation curve. Now, we can simulate this. What would happen if the Indonesian government acted recklessly and emotionally by directly imposing a high carbon tax matching the EU standard of $80 onto our energy sector? The secondary impacts would be devastating. This multi-billion rupiah cost burden would instantly transmitted by energy sector company and industrial sectors into a massive spike in electricity tariff for the public. This electricity price surge would immediately cripple the purchasing power of citizens at the grassroots level, trigger food price inflation, crush the competitiveness of our entire manufacturing export sector in international markets. Therefore, implementing this hybrid cap and tax same is a middle ground. It provides financial rewards for companies that successfully reduce emission while enforcing major tax penalties for entities that pollute beyond the state tolerance limits. Ladies and gentlemen, we go to the next slide. The policy paradox, that is domestic stability or global pressure. We now arrive at the climate of the critical argument. Dangerous policy paradox discovery that must become serious concern for financial authorities in developing nations, including Indonesia. On one hand, our government decision to repeatedly postpone the full physical collection of the domestic carbon tax is highly understandable and has a powerful political, economic justification. Protecting national energy price stability post-pandemic and shielding public purchasing power from onslaught of a global inflationary storm. However, let's flip the coin and look at the consequences at the global level through the CBAM fiscal threat. When our national strategic commodity industries, iron, steel, aluminum, export their manufactured product to EU markets starting this year in 2026, our domestic carbon tax rate is too cheap at the USD2. Our deferred collection policies will absolutely not be recognized by EU custom authorities as a significant carbon offset. Why? Because the EU considers our environmental protection mechanism too cheap and completely unequal to their internal price benchmark, USD 80 to 100 USD per tons. Consequently, Indonesia exporters mercilessly forced to pay the massive remaining carbon price differential deposited directly in cash into the EU customs treasury at their entire borders. Let us ponder this tragic and sovereignty damaging economic paradox. The industrial activity operates on our homeland. The air pollution is generated in our atmosphere. The long-term environmental degradation is suffered by the Indonesian people. Yet, the primary sovereign right to collect the tax revenues is straight away enjoyed by the European Union due to our own delay and hesitation in executing a full sovereign domestic carbon tax collection. This is a stark manifestation of a structural fiscal drain within the international tax landscape. Facing this concrete threat, we go to the next slide.
Okay, Prof. Dian,
Yes.
because we have 2 minutes left, please give a conclusion regarding your topic.
So we go to the end of this slide. One slide again. Securing, okay, please back. Securing economic sovereignty in the green era. At the end of my presentation, we can conclude that look forward to constructive feedback, the critical inputs from interactive discussion from all of you, as well as from the esteemed international co-panelists. I enforce you to raise questions, to discuss about your opinion, talking about the hot issue. First, the evolution of the carbon tax, where carbon tax have fully evolved. Next, a responsive and tactical approach amid global asymmetries, pressure from the EU, CBAM, and the IMF proposal. And last, green economic sovereignty, the cap and tax that keeps the sovereignty flow to the EU. That's all my presentation. Thank you.
Okay, thank you very much, Professor Dian, for the insightful presentation. That was a great presentation. Now we are going to have discussion session around 5 until 10 minutes. For the audience, if you have any question, by raise your hand or chat, please open your camera and microphone.
Okay, thank you for Prof. Dian. So very nice the presentation. I would like to ask for Prof. Dian. My question is setting up a robust monitoring, reporting, and verification system is highly complex and administratively expensive. How can a developing nation like Indonesia build a credible MRV infrastructure while mitigating the high risk of corporate greenwashing and data manipulation?
Okay, thank you. I can see your name, but thank you for the participant. Okay, Professor Dian, you get the question.
Okay, yes, I got it.
Okay.
Thank you, Miss. Talking about falsification, talking about manipulation is happened since our the ancestor. It means it's very common. Relate with our topic today's overcoming the institutional constraint, the moral hazards. When there is a limited regulatory capacity, so it requires technological automation and what we call decentralized enforcement. First, to combat prohibitively high compliance and auditing costs. We already heard from the presentation. We must avoid this high costs because usually compliance is high cost. No matter the situation, the government should set the compliance should be at the low cost. The government must leverage the higher education network to help to increase this awareness, to increase to foster this proposal by empowering, for example, these university tech centers serve as official regional emission literacy. This activity, our activity today, is a very good step to have a green literacy, carbon tax literacy. We can rapidly train thousands of local certified independent auditors, making compliance affordable for mid-sized enterprises. For the certification, the government should be careful. Low cost doesn't mean low quality. It means the standard setup, the monitoring, the certification of auditors strictly watched, monitored. Then we will have a very qualified, high qualified auditors. The students for the next audit, as the next auditors, they have high awareness since they are students. The students will stay in the work in the future. So they are very important. The literacy very important. The second, as we know, greenwashing everywhere. Greenwashing become easier today, become normal today, but we have to stop to normalize greenwashing. We also face data manipulation, not only in the green issue, in the financial, the old ones already have faced the data falsification. It means we can follow how the authority to stop or reduce the falsification, the manipulation of financial data. So as the green issue, the green malpractice, the greenwashing should be followed how the financial sector try to stop its malpractice. The National Registry must transition toward a digitalized blockchain. The blockchain must be the backbone of MRP infrastructure. By automating data flows directly from verified industrial smokestacks, sensors, and energy meters onto an immutable digital ledger, I believe we can eliminate human intervention in loopholes for doing fraud, make only a paperwork adjustment without action, and finally will balance with immediate financial rewards. Remember, stick in carrots. So we can preferential interest rates or cheaper capital on the domestic carbon exchange for the good achievements, for good achievers. Dr. Intan, that's all my question. Hopefully it can fulfill the question of the audience. Thank you, Dr. Intan.
Okay. Thank you, Professor Dian, for your explanation. We have one question from Anifatul Rahman. Yeah, Anifatul Rahman.
Okay, thank you, moderator, for give time to me. My name is Anifatul Roma. I will ask to Mrs. Dian Anita. So, and my question is, why do critics and empirical research label the European CBEM as green protectionism rather than purely environmental preservation? Okay, thank you.
Okay, Professor Dian, can you get the question?
Give me a minute.
Okay. Oh.
It's very technical question.
Okay.
Okay. Okay, thank you, Anifa. While the EU frames CBAM as a oral tool to prevent carbon leakage, yes, we understood that. But compared to empirical research, for example, a study by Zhong and Tang in 2024, their study demonstrates that those acts as disguised skin protectionism neutralize the comparative advantage of developing nations because of those border tariff export costs for manufacturing commodities from developing nations are projected to shoot by double digits, instantly displacing them from global supply chains to shield European domestic industries from free market competition. Remember when we push to enter free market competition. Furthermore, it creates injustice, historical injustice. Wealthy nations burn fossil for more than 250 years for free. But now, erecting tax blockade against developing nations on behalf of industrialization and green protection. Dr. Intan, that's my answer. Thank you.
Okay, thank you, Anita. Yeah. Uh, Thank you for the engaging discussion. Thank you, Professor Dian, because our time is limited. So next, before we end of this session, yeah, please join me in expressing our gratitude to our speaker for her exceptional presentation by giving a certificate to Professor Dr. Dian Anita Nuswantara as a keynote speaker for today. Okay, this is the certificate to Professor
Thank
Dr. Dian
you.
Anita Nuswantara.
Thank you, Dr.
Okay,
Intan. Thank you,
thank
everyone.
you, Prof, for your exceptional presentation.
Yes,
And
thank
thank
you.
you to our participant for contributing to this session. And thank you very much for the insightful presentation on the evolving landscape of carbon tax policies across the globe. So, the discussion has provided us with a valuable understanding of the growing international pressure to address climate change, the increasing convergence of carbon pricing mechanism. So thank you very much. Okay. Ladies and gentlemen, while understanding global developments and regulatory trends is essential, the next critical question is how governments and industries can effectively respond to this challenge. The success of carbon taxation depends not only on policy design, but also on the implementation strategies that ensure environmental objectives are achieved without undermining economic growth, industrial competitiveness, and social equity. So, in this regard, our next session will focus on practical and strategic approach to implementing carbon tax policies. The discussion will explore the synergy between carbon tax and emission trading system, industrial decarbonization strategies to reduce emission while maintaining competitiveness, the effective and equitable use of carbon tax revenue measured to prevent carbon leakage and industrial relocation, as well as the importance of robust MRV system to ensure international credibility and recognition. These issues are increasingly important as countries seek to align their climate commitments with economic priority in an environment characterized by rapid change in government and international trade. Through this webinar, we hope to gain deeper insight into how carbon tax policies can be implemented in a manner that is both globally aligned and economically sustainable. So, it is now my great pleasure to introduce our second speaker, Dr. Ida Surya Ismail, CAM CPA Australia, from University Technology Mara, UITM Malaysia, who will share valuable perspective on strategic approach to carbon tax implementation and the role of government and industry in advancing climate goals while strengthening long-term competitiveness. Let me introduce the second speaker for today. To operator, would you please to share the profile? Thank you. Okay. Dr. Ida Surya Ismail, CAM CPA Australia, is a senior lecturer in the Faculty of Accounting at University Technology Mara, UITM in Malaysia. Yeah, okay. She completed her bachelor and master degrees in accounting at UiTM and earned her doctor of philosophy PhD in accounting, specializing in taxation from University Kebangsaan Malaysia. Having more than 15 years of teaching experience, she possesses expertise in taxation, particularly individual income tax, corporate income tax, dividend policy, and dividend taxation. Yeah, okay. Active in academic activities, she has also supervised students in master's and doctoral programs and participated in various national and industry level research grants. Yeah. Yeah, this the super her experience. She has also supervised students, and then in recognition of her contribution to research and innovation, Dr. Ida has received numerous awards in international innovation competitions. Okay. Currently, she also actively holds various strategic roles in research development and academic governance at University Technology Mara. Yeah. Okay, please join me in welcoming our second speaker. Okay. Hello, Dr. Ida Surya Ismail.
Assalamualaikum. Hello, hi.
Waalaikumsalam warahmatullahi wabarakatuh.
How are you,
Okay, this is
Dr. Intan? How are
yeah,
you?
I'm fine, thank you. This is the first time I've met you.
Yeah, yes. This is also my
How
first
are
time
you? Yeah.
to your
How are you today,
university.
Dr. Ida?
Alhamdulillah, thank you for inviting me.
Yeah, I'm my pleasure to inviting you here. So, in Surabaya, it rains heavily almost every morning, so I always have to bring an umbrella before I head to work. And
Okay.
how about the weather in Malaysia?
Currently, we also have a season which every morning or night we have raining. And then sometimes we have problems, but not all the time now because we also have a good weather here. But currently it's okay. Currently it's okay.
Oh, okay.
Weather is
Okay.
okay.
Alhamdulillah. Okay. Today we have an interesting topic that will be presented by Dr. Ida. So, Dr. Ida, the presentation will be 45 minutes.
All
I
right.
will give you a sign when there is 5 minutes left,
Okay.
and we have 15 minutes for discussion.
Okay.
And for the audience, please do not turn on the microphone during the presentation. If you have any question, please raise your hand or put comment in the chat box, then I read them later. And please state your name and affiliation before asking your question. Okay, without any further ado, we invite the second speaker, Dr. Ida Surya Ismail. Please do the honor to start the presentation.
All right, thank you, Dr. Intan. Actually, here in Malaysia, we're already afternoon, right? 12
Yeah.
o'clock. Yeah, good afternoon, everyone. I want to extend my thanks to the Universitas of Negeri Surabaya Tech Center community for hosting us today, and to all of you for being here to discuss such a critical theme, which is navigating carbon tax policy to achieve climate goals through goal turbulence. Okay, we just heard a very fantastic overview from our first speaker, which is Professor Dr. Dian Anita. related to the immense global pressures we are facing. So a very clear picture on the international dynamics at play, from the challenges of the global carbon price disparities to very real trade that mechanism, which is CBAM. Professor Dian called it as CBAM, Carbon Border Adjustment Mechanism, posed from the unions. And this is actually a trade competitiveness of developing. Okay, whilst Prof. Dian outlined the global turbulence and the pressure we face, my goal today is to talk about the strategic carbon tax implementation and how we can align with the global standards and strengthen the competitiveness. All right, because we want to know what is a strategic approach that we can adopt to ensure that our carbon policy is not only aligned with the strict global standard, but also we want to actively maintain the strength of our economic competitiveness. Okay, so let's look at the presentation outline. The next slide. Okay, for the strategic approach for governments, we are talking about government and also industries implementing the carbon tax policies that align with global standard with strengthening competitiveness. I will focus on actually 4 main themes, which is synergy and systems. And then we talk about industrial strategies. What is the strategies that could be done by the industry player? And also we talk about whether it can be a revenue to governments or to the industry itself, and how to prevent the relocation. Prof. Dian also mentioned about carbon leakage. Okay, so now we want to look at how actually we can prevent the carbon leakage or prevention of relocation. And also the last part is in the perspective of international recognitions, what we can gain from this strategy. Okay, next slide. Okay, let's talk about actually, Prof. Dian also touched already on the definition of carbon tax and ETS, emission trading system. Okay, this is a 2 policies that we are talking about when we focus on the carbon tax policy. Okay, as you know, carbon tax is a direct fees imposed by government on the carbon content of the fossil fuels or on the actual greenhouse gas emitted by the company, while the ETS is actually market-based, or we call it as cap and trade. Okay, both actually have been discussed details by Professor Dian. We just need to recap back what is the term that we use when we talk about carbon tax. It means that it is a direct fees imposed, but while ETS is actually a mechanism of allowance. Okay, allowance that give to specific industries or companies that they can use, okay, to up to the certain amount of greenhouse gases for which they can allow to be emitted by all participating industries. However, there is a limitation in ETS using limit that we call as cap. Okay, after the limits, and then you cannot provide any emission anymore. Okay, so based on these 2 different policy is actually can be summarized as carbon tax is actually we can refer to price instruments, while emission trading system is about quantity instruments. Okay, carbon tax is you have to pay for the amount that you carbon CO2, carbon dioxide that you emitted by the company. However, ETS is the quantity instruments that given by the government, okay, for that particular industry, and then you can use that ETS allowance until you finish all the allowance. But if you are not enough, then you have to, pay for the penalty. Okay, let's move on to the next slide. Okay, once we understand the concept of the 2 tax policy, which is carbon tax and ETS. Okay, next slide, please. All right, we want to know how actually governments and industries can strategically use this carbon tax and ETS policies together to align the global standards while maintaining and strengthening their economic competitiveness. So in other words, we want to synergize between the carbon tax and ETS because the character of carbon tax and ETS is different. One is a price perspective and the other one is quantity perspective. Both we already learned before here from the Professor Dian mentioned that there is a limitation or there is a drawback between the both policy. So actually how we can synergize the both policy. So I want to talk about in terms of three perspectives when we want to synergize between the carbon tax and ETS. The first one is about complementary coverage. Okay, complementary coverage. It means that we cannot split between the carbon tax and ETS. We have to, maybe we can implement both carbon tax and also ETS together in one country. So that's what we call as complementary coverage, or how we want to complement. Not only one company can use both carbon tax and ETS, but maybe you can split between the sectors. Maybe you choose one industry or one sector to use carbon tax and another one use ETS. So in the whole country, we can see that we can use both ETS and carbon tax under complementary coverage, because complementary can be a good or advantage to the country. And another perspective is I want to talk about how to synergize between carbon tax and ETS is about balancing certainty. Okay, about because we know that carbon tax is focusing on the price while ETS is focusing on the quantity. So how we want to ensure that the balance can be made when we choose already which one industry that can use carbon tax and which industry can use ETS. It means that we are balanced between the price and the quantity. Because if we only choose one policy, which is, for example, carbon tax, it means that you charge the industry or the company from the gas that emission gas that they are producing or emitted. The government only can collect income from that, which is because it's a price. However, in terms of environmental perspective, it's not good as long as you emitted the gas and then you have to pay. But in terms of environmental, it's not benefits at all. So that's why we have to balance between the price and also the quantity instruments that we can choose. And the last one is hybrid systems, which is we can talk about the price floors and also the ceilings, okay, when we use specifically for the ETS, because ETS is an allowance. I will give you the example after this. Look at how is ETS can be implement in one company, and how actually we can look at the benefits from the ETS. Okay, we move on to next slide. All right, so this is a complementary coverage. As I mentioned, when we talk about two different policy, which is which is carbon tax and also ETS. ETS is often best suited for a large stationary polluters, a large industries, a large manufacturing. For example, companies that manufacturing companies that have heavy machine, okay, like power plants and so on. So they have their emissions are easier to monitor, because we just to look at the manufacturing company and count how much is the emission that provide in the company, and then we can measure how much is the allowance that we can give to that particular industry or manufacturing company. On the other hand, a carbon tax is applied supposedly synergistically to sectors that are harder to cover. under ETS, for example, transportation, residential heating, or small businesses. As we heard from what Professor Dian mentioned, that not all industries are actually listed in this carbon tax policy program. So the government choose which industry first, and then the rest are still not in the carbon tax policy requirement. So from this carbon tax perspective, when we look at why it's actually is not suitable to a large company or manufacturing, because transportation sectors ni, I give you example for transportation sectors. Transportation sectors is consists of millions of individuals that use the transportation. For example, mobile vehicles. Okay, so a lot of mobile vehicles in the countries. So how can we want to measure how much is the the carbon gas emitted from that particular transportation mobile? So every single car, every single truck or motorcycle, to require them to, we have to compute how much is the carbon, how much is the gas that come out from each motor vehicles, each truck, each car. So it's very difficult. So that's why the allowance from the ETS is not suitable. ETS is actually allowance given by the government. You can use when we already measure the gas, and then we give them the allowance, how to use the allowance. You can use the allowance until a limit, and then you cannot use anymore. Okay, so when we talk about transportation, it's very difficult, to compute every single truck. That's why carbon tax is not suitable. ETS is not suitable for the transportation. Okay, that's why when we look at the transportation or residential heating or small businesses, it is very suitable for them to use carbon tax instead of ETS. So this, when we divided the industries, the large industries and also the small business or specific industries, we actually can come up with the decision that we are complementary. The ETS and carbon tax is complementary each other, so that the whole nations can enjoy both the ETS and carbon. Carbon is from the price perspective, and also the quantity perspective in terms of ETS. So that is the explanation how actually we can get advantage when we complement between the ETS and carbon tax. Okay, can we move to the next point? Next slide. All right, when we want to look at balancing certainty, as you know, carbon tax is focusing on the price itself. It means that how much you produce gas or gas emission from your company, then you have to pay for that gas. So carbon tax provide a price certainty, meaning business know exactly how much they will pay per tons of emissions, and which helps them make a long-term investment decision. And even the government also, the authority also can know how much is actually the income or revenue they can gain from the specific businesses, because they know already the how much is the per ton of the emissions that need to be paid by the businesses. Okay, but an ETS not focusing on the price, because they already get the allowance to use the per ton of emissions given for specific in business. That's why ETS provide environmental certainty. It means that we limit the use of the allowance. It means that we limit the company from producing the emission more than what suppose the company should follow. Okay, so this is a very hard cap lah. Is set on the total allowable emissions. It means how much is actually allowance suitable for the industry. So we have to measure first, and then we give them allowance, and then they can use that allowance for the purpose of the company without paying anything. But if you already use all the allowance, then you have to pay. Okay, so guaranteeing that climate targets are met. This is what we want, because we want to make sure that our environmental is good. condition. But if we only use the carbon tax, they produce per ton of emission and then they pay. They produce a per ton per emission and then they pay. Then what happened to the environment? So that's why when we split the policy between the specific industries that we already discussed before, and then we can actually protect our environment on one side, and another side also we can get income from the carbon tax policy. Okay, so that is the explanation related to balancing certainty between when we talk about carbon tax and also ETS. Okay, let's move on to the last point, hybrid system. Right, hybrid systems in some jurisdictions, in some countries, it is a combination, it is a hybrid system. It means that a combination use a carbon tax as a price floor within an ETS. It means that they use the ETS, okay? They use the ETS, but in the ETS itself, they provide carbon tax. Okay, carbon tax. So it combines under one policy. We call it as hybrid system. So if the market price for ETS allowance drop too low to incentivize the green investment, the carbon tax ensure there is always a minimum financial penalty for the polluting. Okay, for the pollution, because we have the concept of allowance. It means that allowance is given. You're only allowed to use that allowance for the purpose of per ton of gas emissions. But if you already use the allowance, all the allowance, and then the allowance drop, okay, to low incentivize green investment, therefore we can charge you a penalty. So that penalty is actually a carbon tax, which is carbon tax is already imposed in the ETS. Okay, as a summary from this part, when we talk about the synergy between the carbon tax and also the ETS, we can say that carbon tax is actually a very price certainty. Predictable revenue, because we know already how much they want to pay, so predictable revenue. Simple administration, so you do the emissions, you have to you produce a gas emission, you use more, produce more, and then you have to pay, okay? And clean interaction with other policies, okay, at the cost of the emission uncertainty. However, under ETS, okay, ETS, it gives emission certainty. Emission certainty, it means that you have to use this allowance only. You already identify the amount of per ton emission that you want to use. So it's very emission certainty, and a politically easier path to enactment because of free allocation. So you just give how much you want, and so the allowance for specific industries. And however, the cost is price volatility, because the when you use the allowance, when you use or you fully utilize the allowance, it means that no penalty is charged for the company. But if you not enough, the allowance given is not enough for specific industries, that means that you have to pay for the penalty. That's why it is a price volatility. And it is a weaker interaction actually with complementary policies. Okay, that is how we synergize and how we explain related to the cost carbon tax and also ETS. All right, so we move on to the next issue, which is industrial, how actually the industries can reduce emissions while maintaining competitiveness through decarbonization. As you know, decarbonization means that you have to, you do something to reduce the gas emissions. Okay, that is decarbonization. So what is actually industry can do to reduce emission? And at the same time, they want to be a competitive. They try to maintain their competitive edge. Okay, let's look at this infographics. Okay, about I want to bring you to the example related to the how is emission trading system ETS work. Okay, let's say we set up a two company. Here, company A is a modern and green company. Okay, and then we have company B. Company B is an older company and traditional company. They refuse to, use technologies that can reduce the emissions. So initial allowance allocation, as I mentioned, ETS is about giving allowance. So initial allowance allocation, and each company receive 100 allowance for 100 tons of carbon dioxide. So company A receive allowance 100. Okay, company B also receive 100. So it means that it is a emission certainty, right? It means you can only use 100. However, based on this 100, company A planned, okay, they mentioned that, okay, since we are modern and focus on the green technology, why not we proactively invest in new machine, energy efficient machinery, solar power, for example, because they are modern company, they are green environment, they try to protect the environment, so they are more energetic, so they try to produce machinery that is more energy efficient. So because of that, let's look at the impact from the action. Company A can manage to use only 70 tons via green technology because they use a machine that is very good. Maybe it's use solar power, so no emission produced. So that's why company A emits only 70 tons via green technology because of the new machine and new energy machine and so on. But company B actually very struggle to update with the aging equipment because they use the older equipment, older machine, so they are not reducing any emission. They are not trying to reduce the emission, so they end up emits 120 tons of using old technology. So when we look at these figures, 70 and 120, company A, they get allowance 100. But now they only use 70 allowance. So they already have a surplus of the allowance of 30 allowance in the hands of A. Okay, in the hands of A, company A, because they are using a very good machine, green technology and so on. But company B, the allowance is not enough because they're producing more tons of the emissions. CO2, carbon dioxide. So that's why it means that there is a shortfall of 20 because you are using more than what you are given. You are given 100, but now you are using 120. So the shortfall of 20 allowance, you have a struggle to pay for the penalty for the 20 CO2 tons that you emits. Okay, so it incur cost to the company B because you have to pay for the penalty because you use extra 20. Okay, so how actually industry can be competitive from this environment? Let's look at the trade. The trade here, it means that company B, okay, sorry, can you present the slide again? I cannot see the slide.
Yeah, I can see too. Okay, the operator, please show the slide.
Thank you, Dr. Intan.
Oh no, up, yeah, slide. What number of slide? No, the up.
Not this one.
Yeah, not this one. Before it. Wait, I will check.
Okay. Before. Okay.
Slide 8, slide 9 or slide 9 maybe?
Before.
Before, okay.
Okay, lagi. Not this one. not this one. Previous slide. Okay, this one. Okay. So when we talk about competitiveness, company A who have extra 30 allowance actually can sell the allowance to another company. So it can generate profit to company A. Okay. And maybe you can sell only 20 to company B. So that company B can use the allowance for their own company. Okay. And then company A can get profit. And the 10 allowance extra can be used in the future. This is the competitive part from the income that can gain from this allowance ETS. But company B, as you know, the outcome is maybe expensive because they have to pay penalty because they use more than the allowance given. And also they have to pay for the extra allowance. So we can look at from this example, actually, when the company involved in reducing the emission, actually company can be competitive enough, okay, through these activities, decarbonization. Okay, next page, next slide. Okay, in a summary, next slide, please. Okay, in summary, from that example, we can look at least 4 criteria, 4 factors, okay, 4 factors that we can talk about when industrial strategies to reduce emission can maintain their competitiveness. The first one is investing in operational efficiency. When you are participating in the reducing the emission, definitely we can maintain the operational efficiency. We can reduce the gas emissions. We can produce a very good machine, okay, invest in a very good machine in terms of using solar power, for example, okay. That is investment part. The second one is looking at turning a compliance into revenue. Okay, if you remember company A is comply. They only use whatever allowance, how much allowance they are given to them. However, since they are very good and they are very efficient, they can actually change the compliance into revenue. When the company sell the 20 allowance are not used, not fully utilized to company B, immediately becomes revenue to company A. Okay. And another one is assessing green capital and premium markets. Okay, assessing the green capitals, global markets and investors actually increasingly prioritizing the sustainability. We know that every companies or global markets are prioritize the sustainabilities. So companies that successful in decarbonize can position themselves as a secure green capital premium market, which is secure, cheaper financing. Okay, when investors want to invest in our company, they actually look at whether the company have strong ESG, strong environmental, social, and governance profile. If we have strong ESG, definitely investors will invest in the company. That we call as assessing green capital. And in terms of premium markets, environmentally conscious consumers, okay, consumers also aware that they have to purchase product which is environmental friendly. For example, we want to purchase aircon. We want to ensure that our aircon is, environmental friendly. Okay, we look at in Malaysia, we look at the number of stars for the environmental friendly product and so on. So even when the consumer can choose, okay, which product they want to buy, it means that they are willing to pay more for that product. That is what we call as premium markets. You have to, you have a target for specific consumers. So that means that you can enjoy more revenue. Okay. And the last one is from the perspective of reducing emission, maintaining the competitiveness, is we can look at the utilizations of reinvested tax revenues. Normally, forward-thinking industries means that company A, for example, they want to produce a machine, a very good machine for the environmental use, polar system, and so on. solar system and so on, that is actually definitely have a support from the government. When the government support the program or the product, they can enjoy, the business can apply for the grants, tax break or subsidies from the governments funded for that specific products. So it means that it's helped the transition of the company towards a green technologies. So this offsets the initial capital of required for decarbonization by protecting their bottom line. It's not only about cost, it's about fund or revenue or support from the government that can actually make your company be competitive. So as a summary for this part, we can say that decarbonization does not have a financial burden actually if the company know how to get the fund, how to get the subsidies, how to get the exemption, tax exemption from the policies. Instead, it can be framed as an essential strategy for innovation and survival, and directly fulfilling the objective of opportunities for transitioning toward low carbon economy. Okay, let's look at another issues, which is the next slide. Next slide, please. Dr. Intan, can you help me?
Yeah.
All right.
Okay. Okay. The operator, next slide, please. Slide 10. Okay.
Okay. All right. I think I already mentioned this one. Okay, you can move to the next slide.
Next slide.
Okay. All right. This is another part. When we already look at the how we want to synergize and how we want to how we want to involve in the decarbonization project. At the same time, we want to be competitive. Now we want to look at the issue of the fair allocations and utilization of revenues generated from the carbon tax. Under this category or this issue, we want to look at first part is direct dividends, okay, and then tax shift, and also the last one, green reinvestment. Okay, fair allocation and utilization is actually often referred to revenue recycling. Okay, revenue recycling. Fair allocation and utilization of revenue is actually revenue recycling. A carbon tax, as you know, as we discussed before, carbon tax generates government revenue because you produce your gas, CO2, and then you have to pay. That is also government revenue. And how government use that revenue to spend that money, for what purposes, what policy that they can use, that is the utilization of revenues from the carbon tax. So let's look at how it's actually explained using direct dividends. Okay, next slide, please. Okay, as you know, fair allocation and utilization is very critical. Why? Because as a business that have to pay for the carbon tax, they always a question, when I pay this carbon tax, what is how the government uses money? Okay, how government uses money? Because when they know exactly how the government use that money, so the policy of carbon tax policy can be publicly accepted and economically successful. We can categorize that this program or this policy is accepted by the all the taxpayers, and also it is successful. So how we want to measure this? Let's look at the in term of perspective of direct dividend. Okay, direct dividends. Disproportionately, a common criticism for the carbon tax is actually regressive, meaning it is disproportionately hurts low-income households who spend a larger percentage of their income on energy and fuel. Because low-income group, Okay, low income group mentioned that if we have to pay for the carbon tax, it means that it will definitely affect our income. We already have low income. Now we have to pay. So more cost to them. Okay, more cost to them. So to ensure the fair allocation, because we bring the issue of fair allocations, so to ensure the fair allocations, actually the governments can take the revenue generated from the tax and return it directly to citizens back. Okay, how they can return it, maybe in terms of carbon dividend, or we can call it cash rebate, for example, carbon dividend or cash rebate. Often the lower or middle income household receive more money back in dividends than they actually pay in the carbon tax. So it means that it will protect, it will protect them from rising energy costs. So when they pay the carbon tax and the government take the money and then give back to the citizen in terms of carbon dividend, it means that you have to, you can use this carbon dividend to produce a machine which is green technology and so on. So they of course they will happy because they get back the money from other perspective, or we call it as cash rebate or carbon dividend. So this is how actually the government can use the money, okay, because the word is utilization. So we want to know how the government utilize the money through fair allocation by giving back to the citizens in terms of carbon dividend or cash rebates. Okay, next one, next slide. Other than direct dividends, the government can also make a tax shift. Okay, tax shift. What is tax shift? Tax shift is actually try to boost the economy. Okay, this is another utilization strategy to make the carbon tax revenue natural. Okay, as you know, when we collect the carbon tax, it means that sometimes the business is not happy. So how is actually the government can use? So we call it a revenue neutral. When the government, instead of keeping the money, the government keep the money for other purposes, maybe the government can use the carbon tax revenue to lower other taxes. You set off with other taxes, for example, personal income tax or corporate tax that the business should pay. And we know that this is a direct tax that every company, every individuals have to pay. And we have no choice for that. So maybe the government can use the carbon tax revenue to lower the other income tax. For example, personal income tax or corporate taxes. That is how we explain on the tax shift. Okay, high carbon tax but lower personal income tax. High carbon tax but lower corporate tax. It means that you set off. So the business is actually definitely we appreciate this situation. And this shift, actually, we can say that this shifting strategy is actually shift the tax burden away from things we want more, which is an income generation or job creation, and onto things we want less, which is a carbon pollution. Okay, carbon pollution. All right, so let's move to the last point under this issue. Okay, which is green investment. Okay, green investment. So how actually government can use this carbon tax or revenue collecting from the carbon policy? They actually can accelerating the decarbonization. Okay, accelerating decarbonization, where the governments can utilize the revenue to directly fund the transition to low carbon economy. Okay, as I mentioned before, when company A try to use the allowance efficiently when they producing a machine which is green technology, for example, definitely they need cost. When they need cost, they have to apply for the fund from the government. So the government should use the carbon tax collection to fund directly for the company who wants to produce the low carbon economy. For example, produce a machine which is using a good, friendly, environmental friendly, and so on. So provide them with the funds. Okay, for example, this can be also include subsidizing the industrial decarbonization the government can use actually the carbon tax revenue to provide grants or cheap loan, cheap loan to the industries trying to upgrade. Those who have interest to upgrade to the green technology, we just provide the subsidies. Or even if we not subsidies, you can also provide infrastructure. For example, investing in a massive public transit project, for example, electric vehicles charging network, provide all the charging network so that we can boost the demand from the EV car, for example, and renewable energy grids. Okay. Okay, that is my explanation related to how actually government can use in the terms of fair allocation and utilization of revenue. Okay, we move on to the next slide. Okay, this next slide is about critical role of MRV. Okay, MRV, we already heard from the Prof. Dian mentioned about how actually MRV, okay, how actually MRV can stop the industries, from moving to countries that do not have carbon tax policies. We call it as carbon leakage. Okay, carbon leakage. So this MRV, monitoring, reporting, and verifications, is actually to ensure your policies are recognized internationally. This is what we call as international recognitions. Okay, international recognition. MRV, the Foundation for International Climate Credibility, is actually the backbone, okay, the backbone of the climate policy. Without this robust monitoring, reporting, and verification, a carbon tax or ETS lack of evidence to taken seriously by the international community. Okay, because sometimes we, as a company, we can only disclose how much is the gas emission per tons that produced by the company, but we need someone else. We need an independent body to monitor, okay, to monitor and to recognize whether it is true or not. Okay, so MRV, as I mentioned, MRV is a process where the monitoring emissions, reporting data to authorities, and independent verification have been made, okay, to ensure the carbon pricing is real and accurate. Okay, real and accurate. So sometimes in situation, I just bring you to the situation where when we implement this carbon tax policy, some businesses are not happy with this carbon tax policy. Maybe some of them is very, as per my example, they are traditional industries, traditional countries, companies which is not focusing on the green environment. They are trying to go to someone else, to go to other places. To other places that place have no, do not have a carbon tax in place, or very minimal carbon tax policy in certain area or in certain countries. So they want to move out from the country that have a very strict carbon tax policy. So what is actually the impact from this situation? Okay, what is the impact? How we want to prevent the relocation from this kind of business? Okay, the first one is defending against border tariff. Okay, KBAM, mentioned by Prof. Dian. KBAM is actually prevent from the product imported to specific countries. Okay, we are connecting with the CBAM, okay, KBAM process with trading partners like EU only grant exemption from the carbon border adjustment mechanism. So those who apply for, those who wants to import their product, okay, they must have a carbon pricing system. Okay, carbon pricing system, which is CBAM. Okay, if you don't have CBAMs, so what is the effect? So the products that you want to import, okay, have heavy tariff. Heavy tariff, it means that it will increase the price. Okay, increase the price. So when we subject to a higher price, it means it's very difficult for us to sell the product, okay, to be competitive in the market because the price is so high. So how you want to get a demand from the consumers? So robust MRV provides a proof foreign governments demand. So without CBAM, then we cannot control when the business want to go to other places which is have no carbon tax policy. Okay, you just understand that when the products want to be imported to a certain countries and they want to look at the carbon price, carbon policy report, and you don't have the report, then you will be punished by heavy tariff. Then it means that is your product and not competitive anymore to be sold in that country. So that's how the international stop the relocation of the company to for the carbon leakage perspective. Another one is linking the international carbon markets. Okay, international carbon markets to free allowance within the ETS. Free allowance within the ETS. My example previously, we want to talk about company A and company B within the same countries. But now maybe we can, make more international by giving the free allowance within the ETS, not only to company in, for example, in Malaysia, but also we can share with other business in Indonesia, for example. So linking back to our earlier discussions on the ETS, the government can temporarily, give certain number of allowance for free, specifically for trade exposed heavy industry like steel, aluminium, or cement manufacturing. So I think most of the countries now already selected these industries to follow the carbon tax policy. Okay, so these industries, for example, cement in manufacturing, when they have the allowance, they can also get the free allowance from other countries as well. So this is the immediate financial shock of the carbon policy and keeping them competitive globally and removing the urgent pressure to relocate. It means that we put pressure for them. No need to relocate to other countries, for example, because we can share the allowance, for example, okay? While the government is actually gradually phase out the free allowance over time. Okay, this is actually a short-term basis for the free allowance. All right, the last one, when we want to prevent the carbon leakage, is from the output-based subsidies. Okay, attracting global investors and tax exemption. Maybe you can offer tax exemptions. The governments can implement targeted tax rebates and exemption for specific industries, for example, that face international competition, very high international competition. They can give the tax exemption, they can give subsidies so that they can lower their compliance costs based on their economic output, and the government remove the financial incentive to flee the country. So from this perspective, from the monitoring, reporting, and verifications policy mechanisms, it actually helps to maintain and strengthen the competitiveness of the business, evolving the economic and international trade dynamics. Okay, that is our discussion related to the critical role of the MRV. Okay, so I think we can move to another slides. Oh, that's all. That's all from me. Thank you
okay.
very much. Sorry, Dr. Intan.
Yeah, the last slide.
The last slide already.
Yeah. Okay, thank you, Dr. Ida, very much. Thank you very much for the insightful presentation. That was a great presentation. Now we are going to have discussion session around 10 minutes. 10 minutes already. For the
All right.
audience, if you have any question, raise your hand or chat. Please open your camera and microphone. Okay, we got Alan Firmansyah. Hello, Alan.
Yes, hello, Miss.
Okay, are you ready for the
Yeah.
question?
I'm ready.
Okay.
Okay, thank you very much for the opportunity. My name is Alan Firmansyah from Universitas Negeri Surabaya.
Mm.
I have a question. Carbon tax target on key business entities, in this case, the manufacturing sector, which obviously trigger a domino effect across the entire economy. My question is, do the actual benefits of implementing a carbon tax really justify the fallout, considering how much it can shake up the economy? Yes, my question. Thank you.
All right. Thank you, Alan Firmansyah. I think you get the questions. All right. I know that carbon tax will become a cost to the company. However, as I mentioned during my presentation, even though it a cost to the company, when we look at in a bigger perspective, bigger perspective, you produce or the company decide to, to ensure that they produce to protect environment, they try to come up with the green technology products. Okay, they involve in innovation. When they involve in innovation and green technology product, actually they can get revenue when they sell their product, because the cost is lower when you use the technology, definitely. And even if you charge higher for price for the product, but the demands for specific group of consumers, remember, consumers that really want to protect the environment, they prefer to buy that kind of products because they want to make sure that our environment is protected. Okay, and at the same time, the government also can provide fund to help the business. So when you put your you show that you are supporting the government, definitely government will provide fund. So the demand for your product will increase. When you get the fund, the government provide fund, then the cost for yourself, for the business, to provide the machine, to create a machine, to provide a new technology, all that is funded by the government. So it means that you are not incur cost, even though you are subject to corporate carbon tax. Okay, but along the way, a long term, when you invest in that kind of machine, your gas emission will reduce. When your gas emission reduce, the carbon tax definitely will reduce. Okay, so it becomes advantage in the future, right? In the future. That is actually my answer for the question from Alan. Okay. Yeah. Thank
All right.
you.
Thank you very much for the answer. It is very clear, yeah, I think. Thank you.
Okay, thank you, Dr. Ida, for your explanation. Thank you, Alan Firmansyah. Okay, maybe any question from the others?
I have a question.
Okay.
Okay. Who is it? Arif Arfan. Yeah, Muhammad Arif Arfan. Hello?
Hello?
Yeah, do you want to ask?
Yes.
Okay.
Dr. Ida, do you think it is better for the government to reward the companies for reducing the emission instead of penalizing them for polluting it? That is my
Okay.
question.
Very good question. All right, I think it's good, it's good to do both way. It means that if you want to penalize those who actually produce more gas emission, but on the other hands, government should provide initiative or award the company that who able to reduce the gas emission. Okay, for example, you can look at in terms of perspective award here. Award, maybe they can receive fund from the government to produce, to make an innovation for their machine, for their process, to improve their business and so on. So that is also award. award in terms of grant provided by government to the business. Or they can also provide tax exemption, for example, or tax rebate. Tax rebate or tax exemption for specifically income that produced from that particular machine, which is product which is can reduce the gas emission. So when they enjoy in terms of tax exemption, tax cut, or we call it tax cut, tax deduction, the amount of tax that being paid by the company is reduced as compared to their competitors, definitely they will be happy. That is also award, we can say in terms of award for the company. So other than that, maybe they can, a government can advertise the company's name. Okay, those who are can reduce the gas emission, government will use that company for the purpose of to attract investors, to get more demand. I think it's a good perspective when we focus more on the compliance part. Those who comply will receive this one. Those who are not compliant, they will be penalized in terms of penalty and so on. All right. Thank you. That is my answer.
Okay,
Okay,
thank
thank you,
you
Dr. Ida.
for the statement. Yeah, thank you, Arif. Thank you, Dr. Ida. Okay, we have a question from chat box. May I read this first? Okay, from Neha Shafi. What's one international tax trend that students should start learning today before it becomes the new normal? If tax avoidance is legal, but often considered unethical, where do you think business should draw the line? Okay,
Okay.
Neha, are you there?
Okay.
Okay,
Okay, the Intan.
Yeah.
Okay, I think international tax trend, this is a trend also lah, because we are because we talk about the current issues, which is our environmental issues. Okay, in terms of tax perspective. Okay, when you want to learn today is actually a combination of environmental ESG, and also in terms of tax perspective, in the sense that if you want to charge award, for example, giving award to the business who you reduce the gas emission. So in terms of tax perspective, you want to look at tax exemption, subsidies, fund, okay, maybe tax rebate. That is also term that you can use when you connect with the environmental ESG. And new normal. I'm not sure how is a new normal for you. Is it the ESG is the new normal? Okay, if tax avoidance is legal but often considered unethical, where do you think business should draw the line? Okay, tax avoidance is legal. You can do the tax avoidance. Definitely you can do tax avoidance, but you cannot do aggressively. That is a word. You cannot do aggressively. If you do aggressively, so it means that you can be penalized. But you just do a tax avoidance, for example, choose which method is better. Do I need to pay the machine directly through cash or through through hire purchase? That is a two different mechanism which is legal. But in terms of tax avoidance, I mean, in terms of computation, you can do a tax planning. Which one is better for you? You can claim the capital allowance, or you can claim the limit amount of capital allowance that you want to claim. That is make the difference. So tax avoidance you can do. Every company can do the tax avoidance because it is legal, but you cannot do, as I mentioned, aggressively. That's it, aggressively. Okay, that is my answer for that question, Dr. Intan.
Okay, we have love from Neha Shafi. Okay. Thank you, Dr. Ida. Thank you in advance for the interesting discussion. Okay, before we come to the end of this session, please join me in expressing our gratitude to our speaker for her exceptional presentation by giving a certificates to Dr. Ida Surya Ismail as keynote speaker for today.
Thank you, Dr. Intan.
Thank you, Dr. Ida, for your exceptional presentation. I apologize if there was a wrong say for me during the session.
No, nothing. No worries. Thank you very much for the opportunity. Thank you for the certificate and attendance. All right.
Okay, thank you so much. Hope we can see again, yeah, in other event.
Inshallah. Dr. Intan, you are in the area of tax as well?
Yeah.
Okay. Later on we can communicate.
Yeah, okay. I will contact to you.
Yeah, please do so.
Okay. Yeah, to distinguished speakers and respected participants, ladies and gentlemen, as we come to the end of the session, allow me to briefly summarize several key insights that have emerged from the discussion delivered by our distinguished speakers, from Professor Dian and Dr. Ida. First, carbon taxation has become more than an environment policy tool. It is now a strategic instrument that influences international trade, economic competitiveness, and fiscal sovereignty. Second, while global mechanisms such as CBAM create new challenges for developing countries, they also encourage government and industries to accelerate decarbonization, strengthen their policy frameworks, and enhance their competitiveness in the global low carbon economy. And third, the successful implementation of carbon tax policies requires strong integration with emission trading system ETS, effective utilization of carbon tax revenue, and robust monitoring, reporting, and verification MRV system to ensure international credibility and recognition. Finally, both speakers emphasized the fundamental importance of robust MRV systems. Strong MRV frameworks are essential for ensuring transparency, credibility, and international recognition of climate policies. In conclusions, today's discussion have demonstrated that climate ambition and economic competitiveness are not mutually exclusive. Through strategic policymaking, international cooperation, industrial innovation, and credible governance mechanisms, countries can achieve their climate objectives while strengthening economic resilience and safeguarding fiscal sovereignty in an increasingly carbon-conscious world. So, thank you to our distinguished speakers and all participants for making this event a success. We hope the insights shared today will inspire further dialogue, research, and action towards a more sustainable future. And have a wonderful day and stay safe. Thank you very much. To Master of Ceremony, we hand over to audience to you.
Thank you very much, Ms. Intan. Before we move on to our next agenda, if you could give us your opinion about today's discussion, what would it be?
Yeah, like I said before, so you know that in conclusion, I said that today's discussion is very, very interesting topic and we can learn about it. So I appreciate for our speakers today and for our committee. Thank you so much.
All right, that's great, Ms. Intan. It is certainly a meaningful message for all of us to remember as we continue learning about the intersection between taxation, sustainability, and global development. Once again, let's give a round of appreciation to Ms. Intan and our distinguished speakers for the insightful presentations and engaging discussions.
Thank
Moving on
you.
to our next. Yes. Thank you, Ms. Intan. May you continue your agenda.
Yeah.
Okay, moving on to our next agenda, it's time to test your insights and have some fun with our interactive quiz session. Okay, this quiz has been specially designed to review the incredible materials and text insights shared by our speakers today. It is not only a great way to refresh our minds, but also a fantastic opportunity to see who listened most closely and compete for some exciting rewards. Participants who achieve the highest score at the end of the quiz session will be recognized as our top performers and will receive a special prize. To join the quiz, everyone, please use the quiz's game code displayed on the screen or access the quiz directly through the link shared by the committee in the Zoom chat box and YouTube live chat. We kindly remind all participants to enter their full registered name when joining the quiz, as this will be used by the committee to identify the winners and record the results accurately. Okay, thank you to everyone who has successfully joined the quiz. For those who are still accessing the platform, please don't worry, we will wait for a few more moments before starting the quiz. So hurry up and join the quiz right now. All right, it looks like you all so excited for the quiz, right? So it looks like most participants have successfully joined the quiz. And right now, maybe we will begin in just a moment. So please make sure you're ready. Once again, we wish you all the best of luck, everyone. Okay, everyone. As is this, everyone have joined the quiz, so let the quiz begin. All right, everyone, the quiz has just started now. I think for each question is only 30 seconds, so make sure you choose your answer as right as possible so that you don't lose any point of question. All right? Okay, as we can see here, the Muhammad Kresna is now with the game with a 5 right answer. Okay, Muhammad Kresna still with the game, but the Vika Andita chasing from second place. Okay. The game was so tight, everyone. But still, I look like Muhammad Kresna is still in the game with 7 right answers. Okay, still Muhammad Kresna, still in the game, but the game isn't over yet. All of you is still have a chance to keep chasing the Muhammad Kresna. But the second place with a very tight. All of you point difference is so strict. It looks like you want to fight till the end, right? I can't even keep up with your speed of scores changing now. Okay, remember everyone, once again, make sure your answer is as right and also as fast as possible to earn the maximum point. It looks like all of you almost over, but it's okay. For everyone who's still thinking about the question, take your time, everyone. Make sure you choose the right answer based on your opinion. Oh, it looks like there are any challengers that sweep the Muhammad Kresna position right now. Okay. Right now, there's a Han with 9,500 points. Also, the second place, there's Celia. And Muhammad Kresna right now in the third place, everyone. Oh, the score is changing again right now. It looks like all of you almost over of the quiz. Okay, I think hurry up, everyone. The time is almost running out. Make sure you use the answer you are most confident in. Okay, are you guys all done now? So, the quiz will end in 3, 2, 1. Oh wow, what an exciting and highly competitive quiz session. I hope everyone had fun and enjoyed the challenge. Looking at how quickly the answers came in and the score changing, it seems that many of you were paying very close attention to today's presentation, right? Okay, it is absolutely amazing to see how sharp, enthusiastic, and engaged all of you were throughout the quiz. Thank you to everyone who participated. We truly appreciate your enthusiasm and energy throughout the activities. Before we continue, we would like to remind all participants that the second attendance form is now open. The link has been shared in the Zoom chat box and YouTube live chat. Please make sure to complete the form before 12 past 40 p.m. to confirm your attendance. We would also like to remind all participants that the completion of both attendance forms is required for e-certificate eligibility. Okay, everyone, I would like to remind you that the attendance form, make sure you complete your attendance form before the 12 past 52 p.m. to confirm your attendance. If you already completed your attendance form, we will now proceed to the rewarding session. A special moment to recognize and appreciate the outstanding participation and achievements of our participants. We kindly invite the organizing committee to prepare for the presentations of awards. Without further ado, let's give a big round of applause to our two outstanding participants today. Congratulations to M. Arif Arfan Mahadir for being selected as the most active participant throughout today's event. And also congratulations to Han for achieving the highest score in our quiz time session. What a fantastic achievement! Well done to both of our winners. Congratulations to our most active participant and quiz time winner. Thank you to everyone who participated with such enthusiasm. We hope this achievement motivates you to continue learning, growing, and striving for excellence. Thank you, and let us move on to the next agenda. Ladies and gentlemen, we have now arrived at the end of the International Tax Webinar 2026. On behalf of the entire organizing committee, we would like to express our sincere gratitude to our distinguished speaker and moderator, our esteemed guests from University Teknologi Mahara, Malaysia, the Tax Center and Tax Center Community, Universitas Negeri Surabaya, and of course, all participants who have joined us today. Thank you for your valuable contributions, active participation, and support throughout this event. We hope that the knowledge, perspectives, and insights shared today will be beneficial not only your academic and professional development, but also to your future contributions to society. We would also like to sincerely apologize for any shortcomings or inconvenience that may have occurred during the event. We look forward to welcoming you again at our future events with even greater opportunities for learning, collaboration, and impact. Until we meet again, stay safe, stay healthy, and continue fostering the spirit of tax education. See you at the International Tax Webinar 2027. Wassalamualaikum warahmatullahi wabarakatuh.